let's get down to business.
The debate's already started.
Let's
say
get
women
down to
are from
business,
Venus and men are from Mars. Oh, I tell you, there's so much to say on that.
Back here on Earth, the question is whether gender differences carry over to the art and science of investing.
And sharing her views on investing, we have in our studio Mirriam Macwilliams, who is the chief trainer with Wealth Mentors.
All right, a bit of personal background for our viewers before we get started, because she is no ordinary woman. A millionaire trader, right?
That's right, and she's goes around teaching people, both men and women, how to invest in countries like Malaysia, Hong Kong, Singapore and Thailand. With a university degree in macroeconomics, she started her career as a legal administrator and invested 8 years as vice president of investor relations with Panamco, the largest bottler of Coca-Cola outside the USA.
Well, Mirriam, good morning to you. We were obviously debating earlier on from the break. Now, before we talk about how you invested and you inflated your financial assets from, was it 10,000 to 2 million? Before we get to that, do women invest differently?
I see that it is. I mean, we've done a study when I was working as National Director of Education for the U.S. Stock Investors Club in the States. We did a study and we found out that women approach the market differently than men do. And how differently do they approach it? They approach it more in terms of a business, as opposed to maybe trying to capture sharp moves and counters here, going for big moves today and maybe another week, another big move. They approach it more capturing smaller, consistent moves and being able to have a trading plan that stacks the probability of their successes in their favor.
So they prefer a more long-term approach instead of men looking for short, quick turnaround counters.
Well, I'm not sure if long-term is the approach because
they take
women
fewer risks?
They take less risk, correct, in terms of the movements of their stock. For example, you probably will not see a woman participating in Google.com or the Chicago Mercantile.
But that's true. That's also because they may choose products they're more familiar with, you know, a company like Procter & Gamble, which has products which they can relate to. I mean, that's similar for other people as well.
Can be, yes. Exactly. Or a stock like Goldman Sachs, a stable financial company, yes, as opposed to a stock that, like a Google, like a Chicago Mercantile Exchange, that have these drastic $30, $40 moves in a very short window of time. I think those sharp, drastic moves frighten women, and familiarity with the company, that can definitely play a role. But it really all goes back down to having a systematized plan of action. When you have certain trading parameters, I find that women, for the most part, are more apt to follow those trading parameters more than the male counterparts.
Why is this so?
Because I think there's an ego issue.
I knew that was coming up.
I think that there might have something to do with the ego. And the reason why I believe is that women don't look at a trade that may go against them as being right or wrong. It's not that I was wrong, it's not that I'm right, it's just that that was the trading parameter. It satisfied my criteria, or maybe the trade went against me. Whereas men, I find, place a little bit more of the ego issue.
There's a bit of a gambling factor.
They don't want to approach the market as being wrong when they take a trade.
So ultimately, the bottom line is, who makes more money?
I see that. Again, now I'm not sure what the statistics are here in Asia, because we have not done a study here. We have had some incredible testimonies from people that are both male and female here in Asia that are generating really, really very strong returns. My experience in the States was that from a percentage standpoint, the women had a higher probability of success.
Whoa.
They're capturing smaller moves more consistently is the key. And listen, I had a windfall too. I've had my 50K windfall as well, but they don't happen often.
That's right.
I see.
And so I started to approach the market from the standpoint of not being so concerned about high flyers. And listen, I entered the market at the peak of the bull market towards the end. So I had nothing but familiarity with high flyers, and I myself stepped back. When I started investing and growing my capital, that generally did not come from the high flyers.
Now, just to also clarify, the women you sort of surveyed, were they largely career women or were they homemakers, you know, because there is quite a difference, I believe.
Yes, there is a difference between whether they were married or single. There's a difference between they were professional, non-professionals, and they were, for the most part, professionals, professional ladies.
Now, I want to ask you, how did you inflate $10,000 into, was it 2 million within a 2-year time? You actually took time out to solely invest, focus on investing. How did you do that?
And listen, it was not an easy project. It actually was not an easy road. I started out with making a very hefty investment in my education, which took about a year of time. And then I started investing, and I mentioned that I had entered the market when it was kind of the middle to the end of the bull market. Well, stock prices generally were going higher. Now, what on earth were the odds that I would invest in stocks that would go down? And I did.
What year was this?
1996 or 97, the end of 96, 97. And so here the stocks that I'm purchasing are going down. So here I invest this hefty amount of money in my education, and I invest in the stock market, and I'm losing my money. So I stepped back and started to reanalyze, took a whole nother year. I had a full-time job. And then it was after that second year that I did take about 10,000. And what I did was, in the States, we have the capacity to leverage our investment capital against the stock. We trade what are called derivatives. They're also known as options. And that's when I was able to take $10,000. And within a 5-week window of time, and it happened literally when I was in scuba diving in Papua New Guinea with my husband and visiting New Zealand, I went back to the States and found out that my 10,000 was now 22,000.
Okay. Now, you mentioned you had a full-time job during the first year, much similar to the way other people do it. They are working, they're doing a bit of investing on the side, things go up and down all the time. Did it help, the fact that, was this last job as a vice president of investor relations? One would say, well, you were practicing at work anyway.
Well, it seemed as though I did have an advantage. The only advantage that I did have was probably being able to monitor the market during the course of the day, because that was a product of my job. I followed the company's stock, our competitor's stock, etc. So I would say that that was the only advantage that I had, was that I was able to see whether the market was going up or the market was going down. But in terms of being able to know how the stock market worked, or be able to determine when is the appropriate time to enter a trade, those things I did not learn as a product of my job by any stretch.
Now, Mirriam, you obviously made a lot of money through options trading, but some of people I know who like to take a rather conservative approach, invest in mutual funds or actually long-term bonds, because they think, sure, you're not going to get a lot of money, but you know your money is safe, and considering how low interest rates these days, that's their approach. But would you prefer that, would you recommend that people invest more in options or derivatives?
I think that everybody has to pretty much know where they stand financially. And I think that if an individual has not inclined to self-direct their account, then that is why there are professionals in the industry, and that is their function, to safely generate returns for them over a much longer period of time. They would have to be comfortable with those smaller returns, of course. I myself think that we all should learn how to self-direct our own accounts. I think that we should all be able to take a very small investment capital, and really when it comes to option trading, I am saying a very small, 1,000 or 2,000, and then get that 1,000 and 2,000 to grow. Because if you cannot make money with 1,000 or 2,000, you're not going to make money with 10 and 20,000. It's impossible. And so if you find that, well, maybe options are not for me, then you have found that out with a very small capital.
I see.
So tell us a bit more about the courses that you teach. I mean, I'm sure some of the principles you're sharing with us now, some of the things you teach your students, does it differ from country to country? You're in Singapore, Malaysia, Hong Kong. Do you teach different things? Because obviously the markets are different.
No, do not teach different things. And we primarily focus on the U.S. stock market. And the reason why I think I like being able to teach in Asia is because I find it difficult for people in the States who want to be able to manage and self-direct their own accounts to be able to do so because of that job that they have. And so people here can choose to have their job, go to school, manage their household, which that's kind of a job, isn't it? Yeah. Manage their household, and in the evenings, after their family has been well taken care of, to be able to set aside maybe 15 or 20 minutes and be able to switch on the PC, see whether or not they need to make a decision today, adjust a stop loss, and then switch the PC off. For people that are more inclined...
What are some, for people like Steve and myself and all of our producers who have their ears wide open, we obviously don't have all the time in the world and we can't watch the stock market go up and down, but we would like to know the ABCs, how to inflate your wealth.
Yeah. Well, the interesting thing is, you bring out an interesting point, is that investing in the stock market, the requirement is not to follow the market all day long or all night long, as it is in your case. I don't do that in the States. I don't find that to be a healthy thing. I find that I can watch the market if I'm in an investing position where I'm expecting my profits to, a 10% move on a stock can yield a 100% return on my option. That can happen in 2 or 3 weeks of time. And if that's the case, I monitor the market in a very small amount of time. I can also capture more moves, or smaller moves rather, more frequently. And so that person would probably have to monitor the market maybe an hour and a half, no more than 2 hours in the evening. If you're following the market more than an hour and a half to 2 hours, you're watching it for too much.
I guess,
It's
you know,
probably
looking
not
at the numbers
healthy.
going, it's not changing very much. It's still, you know.
Exactly. Once you enter a position and we teach you how to fully automate your trade so that you create an order, a live working order that takes you out at a profit, or one that covers your, preserves your capital, you fully automate the trade, there's really nothing to do.
Right.
All you have to do is switch off your PC, have a good night, wake up the next day, go to work, have your dinner, send the children to bed, and then at night switch on the PC and see how the stock has opened and whether or not you might want to adjust your stop loss in some fashion. But that's really what investing is all about. It is not designed for us to stay up all night, lose sleep. That's not what my goal is, and that's why I find that we probably have a lot more successes here in Asia than we did in the States, because let's face it, someone who is a driver for the UPS company, I know a gentleman that did attend my training, how likely is he to be able to follow the market or be able to make an adjustment on his position if his job requires that he be on the road?
What are some key indicators that an investor should be watching out for if she investing in the stock market? What are some obvious signs? This is a good buy.
Interesting, because it all really boils down to, it starts out being the numbers behind the company. I mean, and there are free tools on the website that we give to people so that whenever someone decides they want to participate in buying a particular stock, at least know what the fundamental weakness or strength of the stock is. Go ahead and punch in your GE or your IBM and see what the numbers are telling you behind the company. Strong stocks have a tendency of going up because strong stocks get stronger. Weak stocks have a tendency of getting weaker. So if you know that from a fundamental perspective, you're more apt to buy the strong stock. You're more apt to avoid the weaker stock. And so that's where we like to start. Of course, you want to somehow time your entry a bit. And for that, we also combine a little bit of technical analysis. Not a whole lot, just enough to be able to tell you, today, after the first hour, this would be a good buy.
Is now a good time to invest?
It's now a good time, that's right.
It's always a good time to invest.
They're not seasonal. I mean, does it work at the beginning of the year? We know there are quiet seasons like over Christmas or, you know, here. So would you give any recommendations for anything?
The reality is that, you know, there are stocks, for every bunch of stocks that are going up, there are some that are going down. So we don't really use seasonalities as an approach to investing. We don't look at the fact that the year 2005 ended in a 5, and every year that has ended in the 5 in the States has been a bullish year. It was not this year. That's just the way it works. So we don't buy into those seasonalities and those what I call external market factors per se. It's all about the numbers behind the company, and then what is the technical chart telling me? Is it telling me that I am getting ready to enter when the stock is getting ready to give me that 10% move, which is a very realistic, conservative move that every stock can have?
We've got to go, but would you prefer blue chips? Well, simple as blue chips, techs, broader stocks?
Blue chips. More blue chips.
I guess at the end of the day, you kind of have to decide what are your own boundaries, where's your own cutoff point, how much can you afford to invest, and then, you know, and then look at it from there. So it's
And
different
start
for everyone.
small.
Start small.
Okay.
That's right.
Well, many thanks for all your tips there. Mirriam Macwilliams, Chief Trader with Wealth Ventures on women and their investing patterns.
That's right. Well,